Hello everybody, this is Toni Turner and welcome to the Market Now on Friday, July 11th, just before the markets close. Well, the European Union is waiting for a possible letter from President Trump outlining planned duties on his largest trade and investment partner after a broadening of his tariff deadlines in recent days. And on top of that, next week we're heading into second quarter earnings season, so it's probably going to get pretty excitement. Now let's look at three charts that could give us some insight into the week to come. First, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you know, this is the ETF that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading, I said right before the close, at $623.62, barely below this week's all-time closing high up here at $625.34. We are also now about 2% above this February all-time closing high on February 19th at $612.93. Just call that 613 right there. So the SPY, as we looked at it last week and said it was trading at quite a premium or high above its major moving averages, it's trading right, and it still is. It's trading right now at the 20-day, the red line, the 20-day moving average is coming in at $611 and change. The 50-day moving average, the green line, is coming in at $594 and change, call it $595, and the 20-day, the 200-day moving average, the black line's coming in at $584. Now, we know, so you can see it's still trading, it's not sitting on top of, it's still trading at quite a premium to these moving averages. So we know that since the April 7th low down here, at $481.80, the SPY shot up in a very, very strong uptrend to where we are now, and this is nearly a 30% gain from the lows in April to where we are now is just about a 30% gain. And so there's nothing to complain about here. It's been a beautiful uptrend. Now, if we know that since our February all-time closing high back here at about $613, we know that the SPY rolled over from there, fell through its major moving averages, tried to rally in March but couldn't, and then fell all the way down to this low down here at about 482. Then it pulled back here, and this line is at 508 here. Good to kind of keep at your elbow if you need it in the future. Hopefully we don't though, right? So it pulled back here to 508, then rallied up to 595 here in May, then dipped down to the 200-day moving average down here at the end of May, but held at that 200-day and then started walking up its 20-day moving average again, pulling up and way over it to where we are now again at about 624. That's an impressive uptrend. Again, let's look down at our 14-day RSI that we checked out before. We said it was overbought a week ago, but 2 weeks ago it was definitely overbought. We see how the red line shows you how the 14-day RSI moved up and over its 70 line, indicating that in the short term the SPY is overbought. Then it popped up above it again a couple of days ago. The line is still red, even though it's down now to 67. But in the short term, the market is still overbought. Now going forward, because we are at all-time highs, we don't have really much of resistance here. We'll call it 625, could be called resistance. We're a little below it. But for support, then we've got the 20-day moving average is moving up here, the red line at 611, 612, right around here, potential support. We've got this pivot here at 604 right here. We can use that as potential support. Also, this 613 line from from back in February. We could move this over, and the 20 days coming in here at 611. So this is all potential support in here. We've got the pivot at 594. We've got the 50-day coming in. So, and on down. So plenty of potential moving average and price support here should we need it. And again, in the coming week, we'll see how incoming tariff news and earnings announcements treat the SPY. I know a lot of traders are thinking it's time for a pullback here, that it's bound to happen. We will see. I have taken, as I said last week too, I've taken a few profits here, and I am really firming up my protective stops here. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that follows our NASDAQ 100 index, and that's made up of the top 100 non-financial stocks in the NASDAQ stock market, including the Magnificent Seven. So today, when I captured this chart before the close, the Qs were trading at $54.20, just beneath the week's all-time closing high back up here at $556 and change. Now we are here, right here, we are 3% above this all-time. Look back with me back to February. We're above the all-time closing high in February 19th. That was at $539 and change. And right now the Qs, again at a premium to their 20-day moving average, just like the SPYs. The Qs are trading over the red line that comes in at $543 and change. The 50-day is coming in here, the green line at 524, and excuse me, the 200-day moving average is coming in here at 505. So we know that since diving to this April low down here, this was at 402, to where we are now has been a 38% run up all the way back up to here. But not only that, look at the angle of this run up. Look at how it's not 90, but it's close. And we always think in trading that if a stock or an asset can move up at a 45-degree angle, then that's pretty good. But this is much, much steeper than that, which is okay. But sometimes steep means that some profit taking has to be done. So again, since the Qs made that all-time high at 539, again, we know it dropped. After that 38% run-up, it dropped down to, of course, the April 7th low, down to 402. Then it rallied back and made this pivot here at 428, and we want to keep that number kind of at our elbow here should we need it. Hopefully we don't. 428, then climbed up to May 19th highs up here at 522, then rolled back a little bit, then climbed up, walked up the 20-day moving average using it as support, very nice, then even went higher than that again to get where we are now at 554, 555. So we can say, do we have any resistance here? We can't really call it. We're right at the highs, but we'll call it 556 resistance. We do have, again, potential support here at the 20-day moving average at 543. We have the prior high here at 539 as potential support, and that runs in line too with a pivot high here. We've got the 50-day moving average again here coming in at 524, down to the 200-day at 505, and this actually lines up here with this. So plenty of potential support, moving average and price-wise, as we look at this. Now we look down here at the 14-day RSI with me. It's not majorly, if there's such a word, overbought, but it's still clinging to the highs up here for the short term at any rate. Volume is dipping a bit here, and I noticed, and it's totally logical, down here on the SPY and the Qs, that volume is a little lower this week, and it makes sense. So many traders are on vacation right now, so volume is going to be low. It typically moves down in the summer. So just thinking of things to think about here. So the Qs in the coming week, they started down a little bit today before the close, thinking that we may have to take a breather here, and there's as I always say, there's nothing to complain about. So let's not give it all back. The market may have to take a breath next week, so keep an eye on your protective stops. Our final chart today is a daily chart of the SPDR S&P Homebuilders ETF, symbol XHB. The ETF has 35 holdings in it total. Top holdings include Top Build, Williams-Sonoma, Taylor Morrison, Toll Brothers, Lennox International, and so forth. Now, when I captured this chart today near the close, the XHB was trading at just, the XHB was trading at $104.75 and just below the 200-day moving average. Now, you can see that it tried to go up over the 200-day moving average today, but couldn't quite do it yesterday, and then stayed down here today. But it trading at $104.75, just under that 200-day moving average. The 200-day is coming in at $105.96, so we're only a few cents away. And I'm taking this into consideration, but I'm going to tell you about it anyway. The XHB is trading above the 20-day moving average, which is the red line coming in at $99 and change, and the 50-day moving average, which is coming in at $97 and change. The 200-day, again up here, is coming in at $105.96. The reason I chose this is because I saw that I know a lot of the tech stocks have done wonderfully well, but I kind of wanted to go where people weren't paying much attention, although I will admit the volume is going up right now on the XHB from where it was. But it looks like we could potentially, and of course potentially is the word, we could potentially have a breakout here. And so I wanted to kind of keep this in mind. And we can see the high. If you look left on this chart with me way back, you can see November 2024 highs at $125. Then it's because interest rates remained what a lot of people think are high, although over a 20-year period they're actually not. But anyway, with interest rates remaining seemingly high, and other things, the XH money pouring into tech stocks, not builders. The Homebuilders ETF fell down below its 50-day, its 20-day, and fell all the way down, tried to rally in January, but then rolled over again and came all the way down here to its April 7th lows at $85. Then it rallied up to 101 up here, moved back through the 20 and the 50-day, down again down here to back below the moving averages for a few days to 92, then rallied back up over them, tried to stay but couldn't, back down, retested that 92 low. But that's a good thing when buyers come in to hold it up at the last, to match the last point, to match the last pivot. So then it started up again, and the 20-day, the 20-day rose over the 50-day, so now that's a good thing. And price moved up again to where it is today at $104.75. So again, I think the home builders are starting a quiet rally here. And I just want to pay a little attention to it and see what happens. If I had my druthers, I'd rather it would pull back here a couple of points to make the entry nicer on top of that 20-day. But at any rate, in the coming week, if the XHB can move above the 200-day moving average, so it's got to run above 106, And if it can stay there for 3 days and the market's behaving reasonably well, I will buy a position of the XHB in my trading portfolio. I'm going to put my stop down here at 97.25. You're certainly welcome to put yours wherever you like. I'm looking at this as more of a trend trade, as long as it behaves. So I'm putting in my stop at 97.25. If and when the XHB closes above, see the last high here, 112. If and when the XHB closes above 112, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the XHB in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In my program, Trade the Trend to Profits, one of my favorites, and you might be able to use this for the last trade we were talking about, that XHB. In my program, Trade the Trend for Profits right here, you'll learn when to buy, how to easily manage your trades, and to know exactly when to take profits. And you'll make bigger profits while spending less time researching and monitoring your trades, because of course they're longer-term trades. Our new low price for this program is only $127. And by the way, some of my trainings listed here are priced at only $59. And when you order, you'll receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you have unlimited access to learn at your own pace. So from our ever-popular 7 Steps to Successful Trading, another very popular one, How to Swing Trade Successfully, great for a market like this. Trade the Trend to Profits, How to Read Charts, great for novices and if you want to brush up. 3 Winning Setups, great for short-term traders. And How to Bottom Fish Like a Pro, another one of my favorites. Discover how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen, or easier still, just click on the orange button below. So until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.